Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Good afternoon, everyone. Ken Shreve with you. Welcome to another edition of Breakout Investing on TFNN. The show has gone from 2 days a week to 5 days a week, starting last week. This is my second week doing a full schedule with TFNN, 3 to 4 Eastern, 5 days a week on TFNN. So thanks very much for tuning in. The number to use to talk to me, to get through here, toll free, 877-927-6648. 877-927-6648. Don't forget, you can get my show as a podcast on iTunes, and all TFNN programming you can listen on your handheld device as well. Go out for a walk, go out for a run, plug those earbuds in, type in tfnn.mobi in your smartphone browser, and you can listen to the show that way as well. And if you want to look at charts live right along with me, as usual, tune in to Tiger TV right on the homepage of TFNN.com. Channel 1, the show is carried live, and Channel 13, the show is archived. And Tiger TV is also accessible now on your handheld device. So it's been going on for a little while, and very good feedback about that feature as well. Well. Interesting day for the market here again. NASDAQ outperforming. Let's see where we're at here. A little less than an hour left to go in Wednesday's session. The composite right now up close to 1% on the day, 27 points to 29.37. 29.37. NASDAQ composite not that far away, really, from a earlier swing point, a prior high of, let's see, what was that high? Let me get that real quick here. 29.87.94, call it 29.88. I think that was around the July 3rd, July 5th area. So not out of the question that we could take out that swing point in heavy volume. Decent volume in the NASDAQ yesterday. We had a close up near highs after early weakness. Ben Bernanke started to testify on Capitol Hill yesterday, and market really didn't hear anything new, and that caused some selling early in the market yesterday. And by the end of Tuesday's session, it was a pretty bullish day for stocks. Another little bounce off the 50-day moving average for the NASDAQ composite. It is extending gains today. Volume right now tracking pretty close to the 1.7 billion shares we saw yesterday, maybe just a little bit higher. Doesn't feel like we're going to sell off into the close here, but you never know with this market. Kind of feeling like we're going to get a finish near highs again. So buyers back in this market. The uptrend is still intact. We had that follow-through day, that big gap up on June 29th. We had 3 straight days of gains after that, and then whoosh, big wave of selling hits the NASDAQ composite for 5 straight days. All these new positions that were opened up, we're all of a sudden questioning, are sellers coming back in this market? Is the NASDAQ eventually going to undercut the lows put in early June? But buyers back in here. The bottom line is that the market uptrend is still intact. It's still intact. It's under pressure, but it is intact. Headed into today, we've been talking about distribution, higher volume declines, particularly in the NASDAQ composite. 4 for the NASDAQ, 3 in the past 6 trading sessions, I believe it is, or 5 or 6, past 5 or 6 trading sessions, we've seen 3 higher volume declines. So they're starting to cluster a little bit. But I have to say, the action in the NASDAQ yesterday and today is compelling and is somewhat mitigating these higher volume declines seen in the NASDAQ in recent days. 2 for the S&P 500 over the past week or two. So selling not as pronounced in the S&P 500. Let's go ahead and check on the bogey here. S&P 500 now is up 0.5%. Still trading up near its session high, and really getting really close to a swing point here is the S&P 500. Let's check and see. That's going to be, what is it, 1374? 1374, 1375. Again, that's the high right here. So S&P 500 flirting with a breakout. It'll need some good juice to get over that swing point, but things not looking too bad here. Now, when I go over my growth screens, this has been an ongoing issue. I ran a screen, delivered about 60, what I consider fairly, high-quality growth stocks. Of the 60 that the screen delivered, more than half were red. Which is a bit strange, don't you think? It's a day when the Nasdaq's up close to 1%. You've got some stocks moving. Granted, a lot of potential dead cat bounces here. A name like Intel outperforming nicely today. A lot of large cap tech outperforming, but a lot of these beaten down names are rallying after extended periods of weakness. So at least in the growth stock universe I cover, the breadth is not that great today. So doesn't mean that there aren't stocks working out there, because there are some. It's still slim pickings, so it's a market where you have to be very, very selective, very diligent, very just very careful with what you're buying out there. The more time, more research you put in, the highest quality stocks you select. That's typically the best way to go about it. It's been a stock picker's market for a while, but there are some names working out there. Again, I mentioned volume on the New York Stock Exchange and Nasdaq tracking pretty close to what we saw yesterday, maybe just a little bit higher. So overall, compelling action in the major averages over the past 2 days. Taking a look at crude oil, 6 straight gains for crude oil. Today up another, 0.7% to 89.87 a barrel. That's crude oil. And then gold down for 3 straight sessions. It fell $18.70, 1.2%, to settle at $15.70.80 an ounce. And we'll check in on the GLD here. See, it is down right now 0.4% to 152.83. Looks like that 50-day moving average is going to be a resistance level for now. You can see all the way back, starting in late May, early June, just trying to reclaim this support level, and just has not had any luck since late May. Keeps trying to get it back above it, and keeps moving below it. Mentioned crude oil. We'll check in on the U.S. oil fund here. It is up for 4 straight days. It recently climbed above its 50-day moving average. So oil definitely getting a bit. I think we've had 3 straight weeks now where weekly inventories decline. So that's certainly part of the reason for oil's rise here, but we'll see. I'm not really seeing much leadership outside of the refiners, E&P firms, drillers, equipment. I'm seeing a lot of stocks that are 20, 30, 40% off their highs, that are trying to rally off their lows, and in many cases there's been some volume behind the move, but these stocks are not on my radar right now. Take a look at a name like Schlumberger, doing pretty well today, up 1.3% to 68.66, still underneath its 200-day moving average here. Yes, it has moved up nicely off at the lows it put in June. Did recently clear some resistance in the 67, 68 area. That's compelling, but the 200-day line at $70 a share could be resistance at this point. So Schlumberger rallying, but I'm not sure this one's going to be able to be a leadership stock. Take a look at Transocean, RIG. Same type of situation here. Transocean is actually bumping up against its 200-day moving average, can't get above that line. It is uncanny. I know I talk about it a lot, but the charts really tell the story here when stocks, when support levels turn into resistance. And we're seeing it with RIG here. Nice rally off the early June lows, but 200-day line at 47.36. The stock right now is trading up 1.5% to 47.06. So about 30 points underneath its 200-day moving average. So oil prices up for 6 straight days, but not seeing a whole lot of leadership in the energy space. I know some value people getting in there, maybe making a little bit of money. That's fine, but just does not fit my strategy at this point. So not looking at energy that closely right now. Ben Bernanke, second day of testimony on Capitol Hill. He told the House Financial Services Committee today that he does not expect the economy to slip back into recession. I think the market took that as good news. I mentioned yesterday, with the job situation the way it is, 3 straight months of really, really ugly job growth and signs of, retail sales data released not too long ago, not very good. Consumer spending, possibility of that slowing down. Wouldn't be surprised to see growth projections for the rest of this year ratcheted down by the Fed. Right now, they're expecting second half growth of I think it's 1.9 to 2.4%. We could see that moved lower. They next meet end of July, early August. Possible that we could see even lower growth forecast. But, even if we're at 1.5 to 2% growth or 1 to 1.5% growth, it's really not, a double dip recession territory. So, but we'll see. We'll see how that all plays out. Let's check in on shares of Vivus today. VVUS. Another diet pill approved by the FDA. Just a wild day of trading for Vivus yesterday. Don't understand how you can really play a stock like this. Not a stock, really on my radar. Definitely a strong price performer, but not profitable. No top line growth. I really have to have some sort of fundamental story, earnings and sales growth, profitability. You don't have that with Vivus, so. But yesterday the stock was traded pretty wildly. It hit an intraday high of $29.90, intraday low of $20.90. So a $9 intraday price spread. The stock is up 11% today to $29.41. It is trading near its session low, so longs can't be real happy about that, but they did get their diet drug. I believe the pronunciation is Qsymia. 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 The pill was approved for patients who are overweight or obese with at least they may suffer from high blood pressure, diabetes, or high cholesterol, or a combination of all three. So Vivus gets its drug approved today, stock up 11%. VMW, big move for VMW today. This is another stock. I just don't know that this one has the potential to be a leader because of all the technical damage that has been caused since April, May, when it really started to sell off. But stock's having a big day today, up 12.7% to $90.48. Still stuck underneath support levels, which are now probably resistance, the 50-day, the 200-day line. But VMW did name a new CEO. This possibly could be, investors are obviously taking it as good news for VMW. Big day for the stock. Still a lot of technical damage here that's going to take a lot more time to overcome. Right now trading around $90.48, well off a recent high of around $117. So VMware coming out with earnings July 23rd. Good earnings and sales growth at this company. Good growth prospects. Earnings up 20% to 66 cents a share. Sales expected to rise 21%. So there is a fundamental story at VMW. Why have institutions been selling the stock in spades for several months? That's the question. All right, folks, we will be right back.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN Joes, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Laurie Pesavento, Victor Jones, or Daryl Martin, hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com to see what you're missing.
you take a hands-on approach to managing your investments. And whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at directionshares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Masters Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. 35 minutes left to go, and what day are we at? Wednesday's session. Getting a little burst of buying here into the close. Nasdaq now up 1.1%. I call it 31 points to 2941. The Dow also doing pretty well today, up 106, 0.8% to 12,911, and the S&P 500 up 9.7% to 1373. Don't forget Palo Alto Networks. I don't have a chart because it's not trading yet, but that company is going to price tomorrow night, going to price Thursday night, start trading on Friday under the ticker symbol PANW. Palo Alto Networks provides firewall products to enterprise customers. It's going to raise about $242 million by offering 6 million shares. Initially, they were going to offer it at between 34 to 37, but they raised their offering price, good news, to 38 and 40. So demand looks pretty good for this IPO, Palo Alto Networks, PANW. That's going to price Thursday night, start trading on Friday. The company did $220 million in sales for the 12 months ended April 30th, 2012. So that's a new issue to watch here. Chip stocks doing well today. Let's check in on the Philadelphia Semiconductor Index, the SOX, and this has been beaten down, so badly since the middle part of March. Still stuck in a downtrend here, but a nice move. 3.5% gain for the semiconductor index. Still way too early to tell if chip stocks are going to be able to provide meaningful leadership here. If you look inside the chip maker group, the equipment makers, the fabless companies, there's really not much in the way of leadership. Intel, a big reason why the semiconductor index is doing well today. Intel reported earnings late Tuesday. Numbers weren't very good, but let's go ahead and see what Intel is doing here, because it buyers were in the stock in spades earlier, and I'm sure nothing has changed here. Yeah, it's up near its session high, up 3.7% to 26.31. Basically trading right at its 50-day moving average here of 26.27. Will it be able to, get over that 50-day line? Still going to have some resistance in that 26.75, 27 area, but at 26.31, definitely having a good day today. Earnings were down 3% from a year ago to 57 cents a share. Sales were up 4% to $13.5 billion. Interesting, stock's having a big day because Intel did scale back its annual sales forecast. Obviously, the problems of slowing PC demand in the U.S. Are well documented. Not good news for names like Intel. It's still relying on emerging markets like China and India for for PC growth, but good day for Intel today, and it's fueling a big rally in chip stocks. Interesting day for Mellanox Technologies, MLNX, Mellanox Technologies. It is bouncing off its 50-day moving average here. Technically, still very much intact. There were some big sellers in the stock over the past 8 or 9 trading sessions. You can see it came down to its 50-day moving average, actually undercut the 50-day moving average yesterday in pretty heavy volume. So, there's been some big sellers in this stock recently, but it does report earnings after the close, and buyers are in the stock today. Mellanox is up 8% to 67.21. Mellanox is based in Israel, and they're a chip designer with huge earnings growth. So this is one worth watching. It does have a pretty low float of I believe, I want to say about 33 million shares. Let me just check on Mellanox and double check that float, because low float stocks they can move wildly, and Mellanox, the float is 33 million shares here. Earnings are expected to be up 174% to 74 cents a share. Sales up 103% to 128.3 million. So there is a good growth story going on at Mellanox, and stock has made a big price move over the past couple of years. But technically, it's still intact and is certainly benefiting from the rally in chip stocks today. So we'll see what Mellanox has to say after the close. Let's check in on shares of Yahoo, a stock that's really having a hard time getting out of its own way, but it's up 7 cents today. 0.5% to 15.68. Volatile trading in Yahoo for several months now. They hired Marissa Mayer as a new CEO yesterday. Earnings at Yahoo lukewarm again. Earnings up 50% from a year ago to 27 cents a share, but sales were down 1% to just over 1.2 billion. That was worse than expected. So Yahoo still looks like dead money to me for the foreseeable future. All right, folks, you're listening to Breakout Investing on TFNN. Ken Shreve with you. We'll be right back.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her small cap roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about tactical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Ken Shreve with you, Breakout Investing on TFNN. Earlier today, I mentioned that Ben Bernanke told the House Financial Services Committee on Capitol Hill that he does not expect the economy to slip back into recession. We also had the Fed Beige Book come out just a little while ago, and this is basically anecdotal economic information from the Fed districts around the country, and the Beige Book showed that growth and hiring slowed down in several parts of the U.S. No big surprise there. So people wondering why the market is acting well here. We're up 1.1% today on the NASDAQ now. S&P 500 up 0.7%. Pretty bullish day for the market, and it's important to remember that the market is counterintuitive. It's gonna do what is least expected sometime. There are a lot of disbelievers out there that believe the market is doomed to eventually start heading lower. But you can't be too married to one position or another in this type of market. The breadth today, I mentioned, going through my growth screens, seeing a lot of stocks down in price. And so that's a little bit suspicious to me. But when you look at advancing stocks and declining stocks on the New York Stock Exchange, it's getting better, almost 2 to 1 on the New York Stock Exchange. And for the Nasdaq, it's looks like it's about 14 up for every 10 down. So yeah, the breadth is just a little bit suspect here. There's some growth names that I think should be acting better that aren't. Take a look at a name like Apple. It's going to be coming out with earnings next Tuesday. It's trading lower today, not by much, $1.52 to 605.42. This is pretty much just a waiting game for its earnings report on July 24th. Technically, a really strong stock here. There's no question about it. It's setting up in a good base. Swing point around 620. So the question is, do you just want to roll the dice, buy before earnings, and hope that earnings, the market likes what it sees in its earnings report, or do you want to wait for earnings and then stock potentially gaps up? It's always a very tricky call what to do with stocks so close to an earnings report. But Apple certainly trading very, very well today. Other economic data today: housing starts, building permits, pretty darn good data. Starts up 6.9% to 760,000 in June. The estimate was for 743, so that was nicely above expectations. May starts were revised slightly higher to 711,000 from 708. Building permits fell a bit more than expected to 755,000. Estimate was for 765 there, but May permits were revised higher to 784,000 from 780. So overall, housing data, continuing to look pretty good here. Let's take a look at the iShares Dow Jones U.S. Home Construction Index Fund. It after hitting a high of 1725, it is now trading at 1690, down in the bottom half of its trading range, down 11 cents or close to 0.7%. So some sellers in the ITB today. Let's check in on shares of Lennar, L-E-N. A lot of the home builder charts look very similar here. Actually, it looks like a outside day for Lennar. It is down 2.5% here to $30.38. So home builders, this big, pocket of leadership in the market. Lennar not showing good technical action at all today. Really also down near its session low. 2.5% to $30.38. Let's take a look at shares of Zillow. This is a name we've been following for a little while. Nice little breakout in Zillow today, trading at 42.76, up 3.4%. Finally seeing a little bit of juice here. It had a low volume breakout over $40 a share last week. You can see on this day right here, volume was higher than the prior session, but it was still an average, below average volume breakout. Much better volume today. Almost 900,000 shares traded hands so far. That's nicely above its average daily volume of around 600,000 shares. So it looks like a little bit of institutional buying in Zillow. It's still flirting with a breakout over a recent high of 44. So like this one a lot. Think it has potential to be a leader. Elsewhere in earnings today, I mentioned kind of lukewarm results from Yahoo. We had Wynn Resorts today. Boy, I remember at one point these China casinos couldn't be stopped, and boy, Wynn is just an ugly day for the stock today. Looked like a good day was taking shape, hits a high of $100.94. Now it's trading at $96.40, down 1%. So a reversal in shares of Wynn Resorts here. Ugly day of trading. And let's take a look at URI. Boy, I know a lot of people that still like United Rentals quite a bit. And frankly, when you look at recent quarters, all you see is nothing but really strong earnings growth, but I mean, the stock is just getting killed today, down $4.83, 14% decline for United Rentals. It is now trading around $29.60. This one has completely fallen apart, and it's really a good lesson here because, again, when you look at recent growth at United Rentals, all you see nothing but really strong growth. I mean, this time around they reported earnings, top line growth up 58% from a year ago to $993 million. Earnings up 65% to 66 cents a share, and you have a stock that is in the process of breaking down big time. They, of course, provide construction, industrial equipment rentals. Good combination. It's a lot more than just earnings and sales growth. That usually helps. It's usually the main driver of a stock's price, good bottom and top line growth. But if you see a stock technically acting as weak as United Rentals has been acting for several months now, don't argue with the market. I mean, the big investors have been selling this stock for some time now. The handwriting has been on the wall for quite some time here. So United Rentals, good earnings and sales growth, crummy price action today. Bank of America, BAC, also earnings from this one as well. It is down near its session low here, down 34 cents to $7.59. A broken financial stock. See what the XLF is doing here, if that is... I suspect that's probably weak today, but not too bad. This is actually, technicals here don't look too bad. It jumped back above its 50-day moving average. It's been able to hold the line. It is holding, pretty close to a swing point of 1480 thereabouts. And so the XLF is not looking too bad here. 1485 is the swing point here, and XLF is only down 5 cents today to 14.72. And finally, in earnings, let's take a look at U.S. Bancorp. This was a stock that was setting up pretty nicely ahead of the results, and nice day for U.S. Bancorp. You got a breakout from a cup with handle pattern here, USB. And we'll see the high point in the handle area looks like it was 32.60. Okay, here is your swing point. Stock is up 4 days in a row. Decent signs of accumulation in this name, and earnings not too bad. Up 18% to 71 cents a share. Sales up close to 5.6, up 6% to 5.6 billion. So U.S. Bancorp having a good day today, and this is a bank with a fairly steady track record of earnings and sales growth, one that certainly did not have the mortgage problems that a lot of other big banks face. So USB, a high quality name in the financial sector, and its chart says as much. Again, up close to 2% today to 33.56. Tomorrow, in terms of economic data, weekly jobless claims, existing home sales for June, and the Philadelphia Fed. That's a manufacturing survey in the Philadelphia region. It is expected to contract again. I think we've had 2 straight months of contraction in that index, so we'll see what the Philly Fed says tomorrow. Nice solid breakout here today in shares of Stratasys, SSYS. Stratasys makes 3D prototyping systems for automotive, aerospace, industrial markets. A big move for the stock today, up 13% to 58.65, and have a nice little breakout here over $54 a share thereabouts, starting to get a little bit extended here. What I don't like about Stratasys, really, when I look at a chart from a fundamental and technical perspective, the fundamentals are pretty good at Stratasys. Growth prospects are good. Company definitely has a bona fide track record of growth, but it is a stock that tends to trade wildly. And part of that has to do, again, with a low float, only 20 20 million shares. It's a small cap, market cap of $1.25 billion. It's not the most liquid of stocks with an average daily volume, 325,000 shares thereabouts. But there is a growth story that's driving price performance here. But I typically take a pass on stocks that can swing wildly on an intraday basis. Not all the time. I'm not completely averse to owning them, but frankly, Stratasys's technical structure was a little faulty to me. It was a little wide and loose, so I took a pass on this one. Definitely some positive qualities here, but I thought that the technical picture was not as strong as I wanted it to see. But as you can see, stocks can break out from faulty technical structures. It's not impossible for that to happen. Stratasys is doing that today, up 13% to 58.65. All right. Took a look at shares of Apple here, shares of Edwards Lifesciences, EW, under some pressure today. Let's take a look at Edwards Lifesciences. Not looking too bad, though, only down 1% today to 102.11. I think I have a weekly chart here saved for Edwards. Yeah, there it is. And what you have here is just a good, solid, flat base taking shape here. It's been consolidating gains for a little more than 2 weeks. So what I really like this to do is I'd like to see it just move sideways for a little while longer. It's a base that is forming, but that has not completed yet. So I typically don't like to buy stock before a base completes. So this one's going to have to prove itself to me a little while longer. I'd like to see it, again, just base, consolidate, move sideways, and there we may get a new entry point for Edwards Life Sciences. So, so far so good. Good base taking shape, but it's still a bit early. Check in on Spirit Airlines here, SAVE. SAVE. Some sellers in the stock today was thinking that Spirit was going to form a handle area here in a cup with handle pattern. Still could. I'm not a big fan of its big intraday trading range today. It hit an intraday high of 22.54, a low of 21.10, but right now it's down about 3.2% to 21.64, trading in the bottom half of its range. Expect to see pretty good support at the 20.54 level. That's its 50-day moving average. So we'll see how this stock trades over the next couple of days. Still possible we could see a handle area form here in a cup with handle pattern, and possibly a breakout over 23. Spirit Airlines, I really don't fish in the airline group very often, but Spirit Airlines is highly profitable. Good track record of earnings and sales growth. Return on equity is very high, and growth prospects are bright in terms of annual earnings this year and next. So this is another name that I believe has potential here. Keep an eye on that. Save is going to be coming out with earnings later this month. Should be on or around July 26th. Earnings seen rising 27% to 47 cents a share. Sales at $343 million would be up about 24% from a year ago. Let's check in on shares of NetSuite too. Another name I'm watching here. Nice bounce for NetSuite today. It is up 6.5% to 52.72. 52.72. Let's see if I have a weekly chart for NetSuite here. Yeah, there it is. And what you see with NetSuite is actually a nice little bounce here off the 10-week moving average here. So, aggressive buyers could probably take a position here. You had a breakout several weeks ago, and then sometimes when a stock breaks out, it can come back close to its entry point. In this case, NetSuite did find support at its 10-week moving average. So technically, still pretty solid here. Volume is so-so. That's the caveat here. When a stock breaks out, comes down to its 10-week moving average, you like to see a bounce in heavy volume. It doesn't look to be the case here. So kind of a lukewarm buy here. Not clear to me that institutions are in there buying today. Let's check back and look at the daily chart here, and you can see it's just not volume does look a little bit lackluster at 440,000 shares thereabouts. But NetSuite bouncing off its 10-week moving average. And let's check in on ISRG. This is a company that's coming out with earnings Thursday. It is up 1% today to $549.50, back above its 50-day moving average. Wouldn't be surprised to see strong numbers from this company Thursday. Talk a little bit more about it when we come back. You're listening to Breakout Investing on TFNN.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Laurie Pesavento, Victor Jones, or Daryl Martin, hosting their programs live and archived on Tiger TV for your viewing pleasure, 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com to see what you're missing.
Would you like a personal update from Tom O'Brien as to what equities he's trading and what his daily trading plan is before the market opens each morning? Every market day, Tom O'Brien sends out his daily newsletter, Market Insights, to hundreds of subscribers that rely on his daily recommendations when it comes to navigating these highly volatile markets we're dealing with. As recently as May 21st, Market Insights subscribers closed out all 5 open positions for a combined profit of over 68% in one day. Profits ranged from 6.5% to over 24%, and all of these trades had been initiated within the previous 30 days. Now is the perfect time to get a 2-week free trial to Tom O'Brien's explosive trading newsletter, Market Insights, an $85 value. Tom breaks down the market each morning with his market take and provides trade recommendations including precise stops and target profit zones, leaving nothing left to guessing. Log on to TFNN.com today and sign up for your 2-week free trial. Make sure you're a subscriber the next time Market Insights subscribers close out multiple winning trades. Take action and sign up for your free trial today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the opening call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his opening call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his opening call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the opening call, a $64 value, visit TFNN.com today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to archives of those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back to Breakout Investing on TFNN. Ken Shreve with you. Yeah, it's really excited to get excited about a lot of low volume moves. It seems to be kind of the rule, not the exception in recent weeks. But Intuitive Surgical is a recent example. Stock has come off its recent low here, but mostly average to below average volume price gains ahead of its earnings report Thursday after the close. Intuitive Surgical makes the Da Vinci robotic surgical system. Earnings expected to be up 22% from a year ago to $3.56 a share. Sales up 23% to $522.9 million. This is a company that tends to report really strong earnings every time they come out, and you have a swing point of call it 570. 570 in ISRG's chart, but this looks like if you're going to call this a cup with handle, this is definitely a low handle, meaning that the handle area formed in the bottom half of the structure, from a high here to a low here. This looks to me like a low handle, so it's a faulty technical structure. Wouldn't be surprised to see strong numbers from this company. It's a well-run operation. The Da Vinci robotic surgical system continues to enjoy pretty strong demand, but the stock is just a little bit vulnerable here. Not really convinced that big buyers are going to come in here. Could happen. We will see when they report earnings tomorrow. Take a look at Solar Winds here, a stock that has come under a lot of selling pressure of late. Still below its 50-day moving average, but outperforming nicely today, up 4.3% to 42.57. Earnings here are due July 25th. Earnings of 27 cents a share. That's up 23% from a year ago. Sales up 31% to $60 million. So still consistent track record of earnings growth here as well. SolarWinds is a maker of network management software that basically helps networks run more efficiently. Could see good earnings from this company as well, but it's a base building stock, not at a buy point at this point. All right, taking a look at shares of Equinix. Equinix having a tough day today, down 3% to 166. Trying to hold its 50-day moving average here at 165. It is about 50 cents above its 50-day moving average here. So this one is looking vulnerable as well. A data center operator. There was some talk. Was it DLR, Digital Realty Trust, provided some sort of business update, and Digital Realty Trust really getting hammered today, down 5.4% to 75.98. And it's not a similar business. Equinix does data center operations, so companies lease space from Equinix to help them manage large amounts of data. Digital Realty Trust is a real estate investment trust that owns technology-related real estate across the world, U.S., Europe, and Asia. So somewhat of a similar business, but some are saying that EQIX is falling in sympathy to a weak outlook from DLR. Well, we will see. Checking in on Dunkin' Brands here as we head into the close. Dunkin' Brands still trying to hold its 50-day moving average here. This is a name I like in the restaurant group. It just not at a buy yet, just waiting for renewed signs of institutional buying here. Still a lot of money on the sidelines here. That's a big challenge of this market. Still a lot of money out there that hasn't come in yet. Better off waiting for that money to come in spades before you get too aggressive with buys here. All right, folks, that'll put a wrap on today's show. Thanks very much for tuning in as we head into the close here. The NASDAQ up just over 1%. Dow up 0.7%. Tom O'Brien Show coming up next from 4 to 6. We'll see you tomorrow at 3 o'clock Eastern.